Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey everyone, welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Mershazadeh. This quarter, we're featuring what's called exponential growth. Today, we're thrilled to welcome a very special guest, Michael Schwartz, founder and CEO of Magnus. Michael is a nationally recognized wealth management advisor with over 2 decades of experience. He's received multiple honors from Forbes, Financial Times, and wealthmanagement.com, and has led Magnus to become one of the top RIA firms in the country.
Michael, it's an honor to have you on the show. Any of our longtime listeners will know that you were actually one of our first guests back on the show, over about 1.5 years ago. So we're thrilled to have you back on the show and hear what's changed. We'll kind of cover some of the things that we would talk about your past there that we might have covered previously if no one watched that first episode or people missed that one. But we're excited to see what has changed with you and Magnus. So welcome back, Michael.
Great to be back and great to see you guys. And thank you again for having me.
Well, thank you for joining us. We're excited. So, Michael, you've built a remarkable career in wealth management, culminating in the founding of Magnus Financial. Can you share with us, our listeners who might have missed that first episode, how you got started in the industry and what really inspired you to take that leap of faith in launching your own independent firm?
Sure. So, I was motivated or was drawn to the business for a couple of reasons. In no specific order, there was the idea of helping people out, providing a financial resource or being a financial resource to clients, which we defined as the impact with clients, the independence of running your own book of business, and the upside, right? Well, meaning what was always exciting to me, that from day one, when I started as a financial advisor in the industry, I was doing the same thing as people who were uber successful and making a significant amount of money. Now, money didn't drive me to get in the business. It's a benefit of it. But the idea that I was doing the same thing and I controlled my own destiny, I was betting on myself, and there was no political kind of influence to my career trajectory, was, I think, some of the ingredients for success and what kind of motivated me to kind of get into the business and stay in the business. And then that leap of faith to kind of make the move to go independent came from the thought of wanting to further align with clients as a true independent advisor and fiduciary. And the firm that I came from is a fantastic firm, helped me grow my business and get to where I was. And the ability to have a little bit more control, not only from an ownership standpoint, but for instance, making decisions for technology, for potential investments, and kind of creating the dynamic that I was a client of Wall Street, not a client of a bank or a wirehouse or a broker-dealer, in theory, was kind of important to me. So I'm happy I made that leap of faith. It was a difficult decision. And looking back 8 years now into it, no regrets. We're happy we did it.
Oh, that's awesome. And let me ask you this: that the company you came from, was that Pioneer?
So the company that came from, the broker dealer, was Northwestern Mutual. While at Northwestern, I created a producers group, a DBA called Pioneer.
Gotcha. Really cool. And so, I believe the last time we had done the podcast with you, your AUM was around, less than $1.5 billion. If you don't mind me asking, what have you guys been able to grow the AUM to, and what's taking place at the company now in the last 1.5 years?
Yeah, so we're a little bit north of $2 billion of true AUM. There is additional AUA, but we don't count that in our ADV. We only post our AUM. And we've grown from an organic standpoint significantly. So in 2024, we added north of 400 million of net new money in 2024. And if we look at with the amount of advisors, with the growth, I believe relative to what we understand the industry to be growing organically, that we have punched above our weight.
Wow. And let me ask you this, and when you're saying that you added 400 million new AUM, was with adding new advisors to the platform?
No new advisors with that. That's just
adding new money?
That's just new money.
That's phenomenal. Wow.
Yeah.
And then did you guys did you add any new advisors, any new individuals to your staff?
We've added a number of advisors and staff members over the last 18 months. We've added 2 new advisors in the last 18 months, and we've added probably 2 or maybe 3 new, call it staff members.
And so
that's great.
How many advisors are now at Magnus?
So there are 9 advisors now at Magnus that are that have their own book of business.
Wow.
Cool.
And I mean, I'm still blown away. I mean, 400 million of net new money in 1 year. That's remarkable. Without
25%. That's phenomenal.
Yeah. What attribute to that? I mean, was it just bringing on lots of new clients? Was there a couple of really big clients? I mean, all organic.
So I think it starts at the foundation from a decision making so I wear the hat not only as a CEO of the firm, but also as an advisor of the firm. And any decision that we make, I ask myself, is it repeatable, scalable, and ultimately monetizable? So we've created, I think, a process to provide a experience that is a true wealth management experience from day one, and providing a holistic multi-year discipline with a focus on tax optimization provides a larger share of the client's pocketbook over time. So if we broke out that 400 net new, a lot of that came from existing clients. And a lot of our clients are still working and saving money and earning money. So yeah, we've created a process from that initial meeting to the client experience that we believe creates the glide path for organic growth.
Really cool. And let me ask you this. With in light of recent changes that have happened to the marketplace, with tariffs and whatnot, how have you guys been navigating through that? Have your clients been pretty peaceful to you, or did you guys get a surge of phone calls of how everybody over the last couple of years their portfolios have done wonderful things, right? They've gone up 25-50%, and then the second they go down 10-15%, they can't stop calling you, right? How have things been for you guys during that time?
We've been fine. We haven't gotten a lot of calls. I mean, there's always going to be a few clients that call in that kind of list of the nervous Nelly kind of clients. But we do a really good job as a firm managing client expectations as to what we are and what we're not. So for instance, when we're talking to clients, our message and narrative is that we're not here to provide a roadmap on what's going to happen in the stock market. We're not here to find the next NVIDIA or the next AI-infused stock. We're here to create a journey to get you to financial independence. And the question that you want to ask yourselves is not how do you trade in a dislocation and a bear market, but rather were you properly allocated before the stress and the duress occurred? And the answer, rhetorically speaking, that is that you were and are. So the process and the expectation alignment during the courting of the client, and maintaining a client experience all go into reducing the volume of calls in times like this. And I can't say it's always been like that. I remember during the Great Financial Recession, which, was something else. The pandemic was also something else. But this time around, there hasn't been a lot of frantic clients. And maybe a lot of that also comes from, and I think you alluded to this earlier, Mike, like the last couple of years, we've had double-digit performance in risk assets in the U.S. So, there wasn't really, there's a lot of house money coming into 2025.
Oh, thank you. And one more question I had, when you were talking about, gaining all the new assets there, are you still yourself managing a book, or, you running the steamship there?
Yeah, I am running a book. So of the $452 million in net new money, I brought in around 250 of that myself.
Wow.
Yeah. Well, also managing a firm, that's remarkable.
There's the 2 full-time jobs.
Yeah.
It's a lot, but that's why, we have a leadership team, and I align myself with quality, smart, trustworthy professionals that help run the firm on a day-to-day basis.
And talking a little bit about that leadership team, you've brought on 2 new advisors recently. Tell us about when you look on bringing new advisors to your team. I mean, you've managed to grow immensely with keeping a small knit team of advisors. Are you looking for, bringing on the younger advisors straight fresh out of college? Do you have an internship program there? Tell us a little bit about how you guys go about finding new advisors.
Yeah, sure. So we're looking for advisors that have an experienced book of business, that are not necessarily fresh out of school. We do have an internship program, and we've had a lot of success in kind of turning a number of former interns into employees at Magnus. We have right now the majority of the advisors, the demographic are professionals that have been in the business for a number of decades. And we are looking for advisors that are going to share the same core wealth management belief and run a similar book of business. So we don't want to jam an advisor just to hit numbers, right? We're fortunate that we have such a fantastic organic growth story that we don't want to just, for the sake of adding advisors, throw a number of advisors into the mix. And we take a lot of pride. I take a lot of pride in providing a mentorship approach to our advisors, whom over the course of the last 8 years, we've had a fantastic success story. For the majority of advisors, for all the advisors that have joined, they've had remarkable growth in their books of business. And we attribute that to the resources that the firm has for them, along with the mentorship that we provide for the advisors. And, given that I am in the trenches with advisors, because I wear the hat as working with clients as they do, I've built the firm with the infrastructure and the various organizational parts that it runs concurrent and it's congruent in terms of how the firm is built by design, with kind of the vision and the roadmap, with me still being in the business. I think there's a benefit that advisors that are affiliated with Magnus get from that connectivity with everything.
Yeah, and you know what? I like that you said that too, because you being in the trenches, right? There's no excuses for anybody else. You know what I'm saying? It's not like they go, well, hey, you know what, Michael, you don't know what it's like out there. You haven't managed a book in so long, right? So I think that's phenomenal. Let me ask you this: when where kind of the landscape has been going with wealth management, and with where you guys are at right now, where do you see yourself 3 to 5 years out from now?
Yeah, that's a great question. So in September of 2024, we hit our 7-year anniversary of launching the firm. And I was having a conversation with one of my advisors, I think at the end of last summer, and we were talking about the vision of the firm. And he challenged me and said, how are you going to grow at the same rate that you have the first 7 years for the next 7 years? And literally, as he said that, it's like a light bulb went off. And he's still talking, and I'm like, yep. And I go right to my computer, and I pull up a Word document, and I start writing out a roadmap for how the question, right? It's always about asking yourself the right question. And it was asking, so the question was, what do we have to do to grow at the same, right, 20 times rate that we did the first 7 years? So then I reverse engineered it. So I said, okay, we're X of assets, right, of AUM. If I want to be at 20 billion, of assets in 7 years from now, how do we get there? And then I worked backwards in terms of defining organic growth and inorganic growth. And we created a template and a pro forma that has a projection based upon some conservative assumptions with the organic growth aspect of it. But to answer the question, to get to have the same growth, we need to also continue to focus on inorganic growth. And that's a core focus of our strategy for 2025 and beyond.
And so let me ask you this: when you talk about the inorganic growth, had you guys done inorganic growth yet?
So we have. We are in the process of at the final stages of working contractually with a number of advisors to add to the Magnus platform, which should happen in the relatively near future. And so, yes, we have taken an active role, an active focus, myself and my leadership team, and we're about to execute a number of contracts.
Really cool. And is that with other RIAs, or is that with advisors? Where are you guys sourcing the new volume from?
Yeah, it's with advisors that are going to be joining in a tuck-in capacity.
And so let me ask you this: on our last podcast we had, somebody brought something up that I felt was really a great talking point. So in the world of wealth management, right, you have the individuals that are within our age group, I'd say mine and yours, not Ashley's, and where there's a lot of individuals that are 60 and above, but the age gap of 40 to 60 kind of lacks, right? That there was a big, not a generational push of people taking on their families' practices. And so, the wave of new talent, we were talking about, has just kind of got skipped there, right? And so in looking at that, you have the average age of the advisor in our industry being 60 plus years old, looking for retirement over the next 10 years, but you don't have that big push of new people coming into the industry. You had talked about what you guys are doing in regards to I like to call it a training program, right? A boot camp. Where are you guys looking to fill that void and even possibly take advantage of that?
Yeah, so we have thought about how do we always, the question we want to ask ourselves at all times is without compromising the integrity of a client experience and maintaining a fiduciary aspect of things with a client dynamic, how do we continue to grow and thread the needle with the organic growth connected to adding new advisors, but with the goal of enhancing the client experience? And part of what we've been discussing is providing additional lead advisor roles for the organization, which is something that we've been thinking about. And the lead advisor role would be more of a service kind of approach, where you would have an advisor that would join, and they don't necessarily have to have an existing book of business, but they would come in and they would assist with the service side of things. Whereas most advisors, they have to wear a number of hats. They need to articulate their feelings on the market. They need to talk to a client and understand their fears and the emotional side of things. Then they need to service that with an ongoing client rapport and a process and a client matrix system. So having capacity and creating capacity for our advisors not only, most importantly, enhances the client experience, but is a way for us to continue to take advantage of a dislocation from a demographic standpoint in the industry with, a number of I think it's a barbell, right? I don't know what the shorter end is, but with the average age being in the late 60s. And then also potentially evaluating buying certain businesses, right? Going out there and identifying where there's a cultural fit first and foremost, and looking at, right, some type of partnership that will have some type of earnout over a period of years. And that's where we would need to continue to just, because things happen, right? I tell advisors that, 50% of the battle is just showing up for work, right? Every day, it's the consistency. We're in a momentum-driven business. So if we're talking about growing the firm and organic growth, right, which can mean different things to different people, but just growing the firm, right, you have to be committed to it. You have to stay focused. You have to stay vigilant, and things will happen. But direction is more important than speed, and you got to know where you're going. So having the blueprint, I think, is the first part, and we're excited about all the opportunities that are out there in the marketplace.
Yeah. And I'll tell you that there's a lot, right? Because at first it was these retired advisors. In the last 2.5 years, I can tell you what I see on my end. On any given week, I'd say, we talk to 12 to 15 different individuals in the marketplace. And I can tell you that when it comes to the individuals that are reaching that age of retiring, it's funny because, there's been a couple individuals that I could tell you that, they're like, oh my God, no way that I would sell my book for that, right? Because when you take a look at a retired book, generally you have, we call it portfolio runoff as opposed to new assets being added because people are living off their portfolio. You generally have somebody that's, of the age of retiring, their book is kind of retiring too, right? And what we've seen a lot of individuals do is, they purchase the book and then they'll pass it off over time to their G2, and they go in and get more wallet share out of the families and whatnot, which I thought was a great way of taking on that, business practice. But we've seen in our, in talking with people that they're like, oh my God, no way I'd sell my book for that. And then, their book kind of passes them up, and then over time it shrinks, and then they don't really have much to sell, right? So it's now what we see is individuals getting ahead of that, and they're like, well, I'm not going to, I'm not going to end up like, that person that they saw that, had 600-700 million. Now they have 450 million 3-4 years later because they're not adding anything new. They just have individuals living off their portfolios or, passing away. And then they're people who they, leave their money to is changing advisors, right?
Like while the iron's hot.
Yeah, exactly.
Yeah, no, there's a lot of, the landscape of the wealth management kind of universe has grown. It's so expansive now, and it's so interesting, and there's all these moving parts, and I personally feel it's still the first or second inning of the evolution of the wealth management industry.
I totally agree.
I remember, right, the infancy stages. When I started at my old firm, right, there was no such thing. There was no label that called it wealth management. You were either in the investment community or the insurance world. That was it. And when we've seen this kind of the word, the terminology, the resources, the technology, right? It's evolving every single day, every single week, every single month, right in front of us. So kind of staying ahead and staying current in the trends of what's happening is also critical to be at the forefront of the change because it's ever present. It's every single day.
Right. And I think that kind of is a segue into a next question I want to ask you. With all these different ever-changing trends, how are you positioning yourself and your team at Magnus to stay ahead?
With respect to the organic with client growth or inorganic with adding advisors?
I mean, gosh, I would say, with both, I feel like right now, you mentioned really this year, core, you're looking into inorganic because that's a point to, right, for you to grow. I mean, what do you see really is most important to a lot of RAs? We'll generalize, particularly in your size range with your amount of AUM and advisors. What do you think is most important for a lot of these firms to focus on to really position themselves to be in a good area?
So, a lot, what we feel is important to not just firms but advisors is the monetization of their life's work. And they read about in the paper, right? They get emails every day from publications about the sale of a business, and the time, effort, energy that's gone into it. They want to feel like they can be part of that monetization, and their life's work have some meaning and not just go away if they either retire or pass away. So we've put together at Magnus for our advisors an alignment of interests with a potential monetization event for those advisors. And that we believe is unique, differentiates ourselves. And part of how we can do that, how I can do that, is due to the composition of the book that, out of the firm, right, my book is still the largest. So it's a way, it's demonstrates to our advisors that we're all rowing in the same direction together, that the firm takes an abundance mentality to share, right, in the success. And that, we believe, is critical for the cultural side of the firm, for people not to isolate and put their head down and then be miserable, but to be happy and share in the success of another advisor, because that high tide lifts all boats. So that the foundational aspect for the monetization side of things, we believe, is a huge talking point and interest for our clients. For our advisors and future advisors.
And I think that's a great point. And to wrap up, one final question here. I know you have a hard stop here and don't want to take too much of your time, but one final question I have for you would be, coming from Northwestern, building a successful firm yourself, what is one piece of advice you would give? And I kind of want to direct this to those advisors who are currently under someone, say like Northwestern or Mass Mutual, kind of a broker dealer there. What is one piece of advice you would give to them if they're looking to take that leap of faith like you did how many years ago and start their own firm?
Yeah. It's a great question. And I can go on, Ashley, for a long time on it. So to break it down, first thing I would share is that the grass isn't always greener on the other side of the fence, right? Generally speaking. It cost a heck of a lot more than what we thought it was going to be in terms of the expenses to run the firm and the organization. That if you're at a firm now and you're contemplating leaving and to get into the RIA world, that you align yourself with a firm that has the same core values. And the values, not just about how you run money and what the technology is that they offer, but the values of, okay, how is it going to work in the event that the business has a monetization event? What is the growth of the organization? Or if that advisor is interested in being part of the organization's growth, what can be their role? So really kind of, pull that thread with the firm that you're talking to understand if it's a values match. Because what you don't want to do is you don't want to just have a landing spot for 2 or 3 years and then go somewhere else. If you are considering opening your own firm, right, and you're going to take that leap of faith, you really need to crunch the numbers, because I was just at the right amount of money when I left. And
Right.
if I was a little bit smaller, I would have been toast. My margins would have been toast. And I also would tell, for the people that are considering opening their own firm, that there's a trade-off. And the trade-off is current income to balance sheet asset. So the margins running your business connected to a broker dealer or independent broker dealer or wirehouse year to year may be a little bit greater if you are going to open your own firm, because all the expenses you're going to have. But what you're trading for a little bit of perhaps current year income is the valuation you're going to get on your practice in the independent space relative to what you would get in the wirehouse space. That's the key. And understanding that is important to your success, so you can design the right roadmap. And again, you can take that analogy or that example or situation if you're going to be not even starting your firm, but going somewhere else to ask the right questions.
Thank you.
Thank you.
You're welcome.
I think that's the perfect note to end off our conversation today. Michael, it's been an absolute pleasure having you on the show now for a second time. Thank you so much for sharing your journey, your insights. You're such a joy to have on the show with us.
You're most welcome. Thank you for having me, guys.
Thank you. And to all our listeners, thanks for tuning in to another episode of the What Matters podcast. Stay tuned next time for more meaningful conversations. Until then, stay well, everyone. Thank you.
Bye-bye.